Hey everybody, this is Jim at SP500chart.com. It's 4:20 on June 9th, 2014. We're going to take a quick look at the S&P 500 chart. We can do this really quickly today. And if you're in a hurry, I don't think there's really anything new going on, but say I do a daily video, I feel obligated to do it whenever it is possible, which is about 99% of the time. Before I do it, however, I need to remind you once again that the website and this video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Well, today was essentially a flat day, and you can see that we've identified a rising channel here between these two red lines. Additionally, we identified call this a midline right here. You'll remember that oftentimes when you have channels, wedges, triangles, anything where you have trading that takes place between two pretty clearly defined lines, resistance and support, it's just funny how often, if you look at what goes on right at the halfway point, you'll see you'll see where that line seems to have some influence as things move from point A to point B. Sometimes you'll have a channel where you start out like we did here, all north of this middle line. Then you'll break down through it. Then you'll continue the move upwards, but you'll be between the midline and the support line. What's interesting here is on Friday we got above this midline. We bounced on it again today, but in the afternoon we came back down through it. So it's no big deal. You'll see, like, for example, back here in early June, there was a little wiggling around where the price level seemed to be kind of attracted to this line. I, for the life of me, can't tell you why this happens, but all I can tell you is it seems to happen a good bit. So now that we are underneath this midline, I would look to this bottom line right here as whenever we tag it, assuming we do, and I think that's a fair assumption, then that should be support again. So if it happens, we need to just wait and see if we do get support. If this were to give way, we have this line right here, which is kind of unusual because this line itself was also rising and we broke above it. Typically, if you're in a rising situation with a trend line and you're underneath that trend line, usually when you, well, let's put it this way. Let's pretend like we broke over the top of this line right here. I would not count on this line to act as support on a back test because it's rising at a fairly steep rate. This line, however, while it is rising, you can look at it and see that back on the 20th, this was at where was it? 1913, and then 5, 10, 14 days later, it is at 1935. So it's only moving up about two and a fraction points per day. That doesn't mean it's flat, but it means I don't think that it would present as much of I don't think this would be as porous as this line would be if we were to come back to this. All of that to say, and pardon me for getting a little far afield there, all of that to say, this could end up being support if we come back and test it. But right now, I would rather I would think the first level of support would be our rising trend line right here. So guys, that's about it. A pretty good day. Just the fact that we're still over 1900 for now what is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days, and we're over 1900 by 51 points. That means, frankly, the S&P has a legitimate position now over 1900. And I'll just remind you real quickly before I sign off. Our target from our inverted head and shoulders pattern is, well, I'll go ahead and throw it on the chart. We'll do it with a horizontal line here. We're right at about 1990. So let's make this just a bright yellow because I don't think anything else on the chart is. There's our target line. Once we get up to that level, and I believe we will, then we realize we have to say to ourselves then, we cannot specifically expect better than 1990, though we may get it. So guys, there's your video for June 9th, 2014. How nice it is to be up and out of this range that we were stuck in for 13 weeks. I just want to thank everybody for hanging in there and being patient, not only with the market, but with what I do, because that was just a stretch of, literally, I felt like I was just throwing my hands up in the air saying, one of these days, we got to get over or we got to get under. We can't go sideways for much longer. And thank goodness now we are over this neckline right here. And because of the depth of this pattern, we've got that 1990 target in our crosshairs. So I'll sign off with that final word. Thank you for your support. Thank you for taking time out of your day to watch this. And let's see how long we stay in this nice rising channel. Take care.